Hey, this is Justin with DayTradeTheMarkets.com on Wednesday, March 27th, the evening. I wanted to take a quick look at the crude oil market and talk about a trade setup that we were doing a live member session this morning, and we were talking about this as it was developing, and I thought it was an interesting setup, so I thought I would just kind of do a review of it. Now, what we like to do, obviously, if you've seen any of our videos before, is we like to look at various pieces of evidence, some which are real-time, like relative aggression bars and support resistance zones and the filter and divergences, and also the bigger picture bias. And the idea is that when more of these puzzle pieces or pieces of evidence come together, the better evidence that you see, and that supports a certain decision more so than when there's only one or two of these pieces of evidence in place. Okay, so with that said, let's kind of start with the idea of the bigger picture bias. And heading into this day in the crude oil, the bigger picture bias was up, and I mean you can see that relatively quickly if you just, here's a 15-minute chart over the past week or so, and you can see relatively quickly here that bulls are pretty well in control of that market. So heading into the day, all things equal, we would rather be on the long side heading into the day. Now, the caveat there is that, right before the close of the session yesterday, we had a very strong sell-off, and that continued in the overnight. I don't have the overnight shown here, but that continued in the overnight, and it essentially left what we would call excess, or an area of selling excess, heading into the day. Now, then what happened was we looked for our first major structure, and we had it with right around 9:30 or so Eastern. We had this high velocity move box, and then what we call level 3 or extreme selling aggression. Now, in a situation like this, it's what we call a conflict situation, where the intraday or short-term structure at this point is more bearish than bullish, but our bigger picture bias is more bullish. And so, like I said, it's conflict between those two. So you have a choice. If you're very short-term oriented, then you're going to be looking toward the shorter term evidence and this immediate structure of extreme selling that's coming in. If you're more long-term, oriented, then you're going to want to wait until things come in line, until you start to see some bullish evidence that matches our bigger picture bias. And so that's what I wanted to look at here. So the first structure we had was this level 3 selling aggression bar, and so that is a bearish structure, and until that high is essentially taken out, then we have to think that at least bears are in control short term. And so you can see what happened is we got some immediate follow through below, but then this support zone formed. We couldn't really get any follow through below the support zone. There was no more selling aggression that came in. You can see we started to get some level 1 buying. Here's some level 2 buying. We tested up toward the high of this level 3 bar and bounced, but this time didn't quite even make a new low of the day. Tested again, came back, didn't even take out the previous low. So it's just kind of, obviously the market's consolidating, but the bears are having a hard time making new lows. In other words, the logic would be if bears were really strong, they'd be able to, by push 1, push 2, push 3, they're going to be able to break through that wall. That wasn't happening, so that was kind of our first clue that things might be turning. Then we get this next structure, which is a level 3 bar, and its low essentially holds a little while later. Now, the really interesting structure, however, is when we took out the high of this level 3 bar in this high velocity move, and we actually made a new high of the day. We did it on this level 3 or extreme buying aggression bar, and this is what we were talking about today in our session. I didn't take the trade just because I don't trade when we do those sessions, but we talk about the different decision making processes, and we were kind of discussing the various options that you have in this scenario. And so one of the options is, obviously, when we have a level 3 bar on the high of the day, is just take a market order breakout trade. And generally speaking, I'm comfortable doing that when in this situation we have a high, a bigger picture bias that's up. So in other words, we have bigger picture context, and then we're getting extreme buying aggression on the high of the day. I'm typically comfortable with that. However, in this case, the caveat was we had this pretty hard sell-off at the end of the day, so we had what we call excess, or some implied excess right here, showing us that to get through this area here, where we had some strong selling, where we had some strong selling come in yesterday, the market had a little bit of work. So you have to ask yourself, or at least the way we like to think about the decision-making process, is how aggressive do I want to be? Do I want to take a more conservative entry or take a more aggressive entry? So the more aggressive entry would be just take the breakout. The more conservative entry is what we call our level 3 retracement trade, where we're looking to get long, in this case, toward the low of a level 3 bar. And that's what I was talking about I would prefer at the time, when you also kind of look at the fact that this level 3 selling bar earlier in the day was now rejected. Essentially where these bars overlap here, it was a pretty nice area considering the fact that we also had a support zone that came in. We had the low of this level 3 bar, which we expect to act as support. We had a bigger picture bias of up, and then we had our short-term structure, bearish structure that was rejected, couldn't really make new lows, and we started to see some buying coming in. So a lot of things were coming together. If that doesn't all make sense, that's okay. I know I'm kind of going through some of this very quickly. We have other videos that explain it in more basic terms, but what I really want to talk about is just the idea of what's the evidence telling us? What's the true under the surface order flow type evidence telling us as to what's going on? Well, bigger picture again, the market's up, selling comes in pretty hard, but then has a hard time getting through this support zone. We start to see some buying come in, can't make new lows. Then we break through this earlier selling structure and we do it on some very major buying structure. So that's telling us bulls have taken over control of this market. So number one, how do we want to avoid being against that? We don't want to fight that, obviously. So number one is don't get into bad trades. So we avoid being on the long side. The next question then, number two, is how do we get in on the right side of the market in a low risk way to do that? So again, you have the option of just taking the breakout trade or waiting for the retracement. In this case, because we still had some, basically you'd call it seller controlled territory in here to get through, in our opinion, when we were talking about it live, we felt like the retracement trade made a lot more sense. Okay, and you can see that then the market, this was obviously a good spot to be getting into the market. Again, you've got support zone, bigger picture bias, the structure of the day has turned bullish, and then you just kind of get on board and try to hold that as long as you can. So hopefully that makes sense. Again, it's not so much about how do you do it exactly, it's more about the thought process and analyzing evidence as it's coming in to try to put the market in context, because that's really what we have found to be kind of the turning point for so many traders, is when you stop thinking in black and white terms and stop thinking about rule-based trade entries and instead start thinking about, okay, which side is in control, buyers or sellers of this market, or are we in consolidation? If you can identify which side is in control, then again, number one, you can avoid bad trades, and that's going to make a huge difference. And then number two, you can start to think about not necessarily what are my rules for entry, but how do I figure out a way to get on board on that right side in a low risk, high reward type of fashion. So hopefully that makes sense. That's kind of the thought process that goes into this. And like I said, there's other videos. You can click on the link below to learn more about some of the basics, or if you'd like us to send you an email with some of the basics, we can do that as well. So hopefully that makes sense. But again, I just thought it was an interesting setup, that we were looking at live as a group today in the crude oil market, and just wanted to pass that along for others that might not have seen that. All right. Hope you have a great evening, and we'll talk soon. Thanks.